Hello traders, this is the Phantom coming to you live from the Phantom's crypt, where we are haunting the charts and resurrecting profits in the downright ghastly market. Today is October the 6th, 2010. I had a little interesting action in the market and have been having some interesting action in the market recently. We're psyched. We've got earnings season coming up. We're not psyched because we're fundamentalist. We are technical purist, but the earnings season can generate some nice indicators on the charts as prices move. We wanted to let you in on this position we're participating in, which we opened up today on Research in Motion. Okay, we picked up a long position on RIMM today. We're not going to talk about the company. We're not going to talk about fundamentals. We're not going to talk about price earning ratios. We don't care about the iPad. We don't care about RIMM's new tablet. We don't care about Blackberries. The only thing we care about in the crypt is price and volume and patterns, and we trade those patterns to profitability. So we wanted to let you in on what we're seeing on the RIMM chart and kind of give you an explanation of what we're thinking. So firstly, on the daily chart in RIMM, as you see, had a pretty nice top out on RIMM back in April 2010, and we've slowly had just a downward, lower lows, lower highs, cascading downward, losing a lot of money for people on the long side that didn't cut their profits, making a lot of money for the shorts. And we appreciate both sides of the market, but we do see a pretty nice trend, a downward sloping trend channel in RIMM that has been respected over the last couple of months. But recently we had a breakout of RIMM above that trend line back on September 30th, 2010. Now, we don't buy every trend breakout, and we don't sell every trend breakdown. We watch for confirmation, and as we can see on the next day of trading, we traded higher and closed higher from the prior breakout, which at least indicates that this isn't a trend break that was going to be quickly sold off. So it was enough to catch our attention, looking at the possibility of going long. Perhaps this could be evidence that this downtrend is over, and RIMM's going to break out and try to retrace some of these gains. So let's take a little bit closer look at the hourly movement of RIMM, and as you can see from the trend line that we've traced out for you here, RIMM has certainly demonstrated a short-term upward trend line that's been respected on the hourly charts and has been tested a couple of times in the past, and has passed that test to the long side. If you'll note on each occurrence, when we tag the bottom of this trend line, it occurred at a level of an oversold RSI. So it's at least something for you to look at and to consider. You have to add a lot of indicators together. You can't just simply buy every time RSI is oversold. You have to look at it in the context of how the stock has been trading. We noticed today that RIMM once again moving down to this trend line with an relatively oversold RSI. Felt that this was a really nice low risk position to enter RIMM to the long side. So we did pick up a long position on RIMM today when it was trading around 48 bucks. That's what it closed at today. And if you notice, we'll look a little bit closer here on this 3 o'clock candle. We tried to pierce that trend line, but did not close below it, and that's something to keep an eye on. Okay, people that are really conservative, if you wanted to go long on RIMM here, if you were to have a breakdown below that trend line and then a confirmation candle beyond that, that may be the sign that this trade isn't going to work out, and you may want to move on. Then again, if you want to throw some Fibonacci's on there, some people like to use the Fibonacci's. Today we went right down to this 50% retracement at 47.72, and that's where we turned around. So you could use that 50% retracement on the Fibonacci. Excuse me, I'm sorry, that's a 38% retracement. You could use that 38% or the 23% retracement on the Fibonacci's as your ultimate stop loss levels. If the stock breaks down below those levels, then we may want to move on. But we're going to be watching this trade closely, and watch along with us, and be careful, because it can be scary out there.